What's up, everybody, and welcome back to MF1 Dividend Investing. In episode 6 today, we're going to get away from GameStop and get back to the dividend portfolio in M1 Finance. So it's been about 4 weeks since the first time I revealed the portfolio to you. So I think it's a good time to do a monthly update, show you how the portfolio has been progressing, if I've made any changes to it, and just talk about the dividends I received in January. So with that said, please like and subscribe, and let's get started in this video. So before I bring up the actual portfolio to date, let's just go back and look at what I showed you a month ago. So 1 month ago, I had a portfolio value of roughly $6,000. The gain was $736. I had a return, a cash weighted return of 27%. And you can see the actual market gain was $673, and I had a dividends earned of $62. So that was back a month ago. Let's see how we're doing today. So opening up my M1 Finance account, you can see the dividend and dividend growth portfolio now is about $700 greater in value than it was a month ago. Most of that is due to capital contributions. And I think since the last time I've probably added roughly a little over $500 to the account. You can see the net cash flow here is saying $5,859. I think out of that, the 59 or so is dividends that have been reinvested, and the rest is actually the deposit money in. My return is now 32% instead of the 27, which it was before, as you can see here. And you can also see, it was 5,300 and now it's 58. So I put in about $500 more. Again, that's going by my portfolio rules, where I'm investing $262.50 every 2 weeks, regardless of kind of what the market is doing. So that's the extra 500 because it's been two cycles since the last time I revealed it. And we're doing pretty good. So you can see here we're up everywhere. You can see as far as targets wise, right? Technology is now a little over my target allocation. Healthcare is right on it. Industrials, consumer goods, and financials and telecom are all lagging, and then real estate and basic materials are right on par. Now, if you look back a month ago, I don't have all of them, I think, in this screenshot, but you can see technology was actually underweight. So now it's overweighted the portfolio. And that's going to change month to month. Actually, can even change day to day. So I don't put too much weight into that. Overall, you can see the gains have been positive. The account hasn't been open for more than a year, right? It's been opened since April of last year. So we got 2 more months and 2.5 more months, and we'll be coming up on a 1-year review. But so far so good. I can't complain. 32% return, which is actually more when you weight it out, annualized return, since it hasn't been a year late yet. So with that said, let's just go through and look at some of the activity. Well, let's start with the funding history. So you can see here all of last year I've put in $5,000. So far this year I've put in $787.50 to date. And like I said, that's going to be every 2 weeks, a payment of $262.50. And where that $262.50 comes from is last year I was depositing an amount every 2 weeks of $250, and I'm going to try to increase on a yearly basis the amount of money that I deposit by 5%. So the $262.50 is 5% more than the $250. So starting 2021, it's $262.50 every 2 weeks in. Going to activity, let's just look through this real quick. You can see I've had a couple trades recently. This is in February. All the dividends that have come in, I have 100 different dividend paying companies, so you're going to see a significant amount of payments coming in almost on a daily basis, and some on multiples in a day. Amounts aren't a lot right now. The whole account is only $6,700. So you get a quarter here, 50 cents. 1 or 2 kind of high yield and heavier weighted companies are over $1. So right now it doesn't look too significant, but the thing to remember is we're building from nothing, and less than a year ago, I had no money coming in, and now I'm getting paychecks almost on a daily basis, right? If we kind of scroll through this, you'll see here in January again all the dividends that came in, the trading that happened when I put the deposit in on the 14th. I traded the next morning again, and the reason you see it over more than the deposit amount is due to the dividends. So any dividends that are paid into me, I don't take them out. They're left in the account, and then they get reinvested the next time I do a buy. So they'll build up for a little bit, and then they'll do a buy. Once the account gets bigger and I'm getting more dividends in, you may see more trade purchases, because anytime it goes over $25, you're going to it's going to trade the next window open. So yeah, that's the update so far. If you want totals, I'm going to pull open my Google Sheets and we can quickly flip through that. So this is kind of my dashboard that I built for Google Sheets, because M1 Finance doesn't really do a good job of giving you a visual, especially when you want to break it down by month or by quarter or by sector. So kind of all the things you can see here, or even by company. The values may be slightly different than what M1 Finance is showing. That could be just because I didn't upload everything yet. But in general, they're going to be tracking almost exact to the M1 Finance. All the data is pulled from M1, so there shouldn't be much of a difference. But you can see here, cash invested, what it's worth. So just on a percentage basis, I'm up 15%. Dollar for dollar. Kind of gain or loss. Looking at it, a percentage gain or loss on the overall account. Not accounting for my cash weighted returns or when I invested the money. Dividends to date, $61. Again, flipping back to M1 Finance. If we go to the portfolio, you'll see it's a little different here, right? They're saying I've been paid $75 to date. So this is just slightly lagging because the data isn't fully updated yet. I do a calculation myself, so this is anticipated based on my holdings right now today, what dividend I can expect on a yearly basis, and this will change every time I do a new buy or a dividend gets increased. So right now I'm expecting on an annualized basis, right, I should receive $170 a year from this account. You can see the account's been doing well, right? I've been kind of buying in and averaging up because my yield on cash, the amount of money I have invested, is 2.92%, but the market value yield is 2.5% because it's gone up in value. So that's normal. When things dip down, you'll see this go up. But in general, you'll want to see your yield on cash be higher than your market value because you want your account to be growing, you want your dividends to be growing, and it should in general be higher. Here is the anticipated payments per month. Again, this is based on as of today, so it's not accurate and it's going to always change, but it gives you a good idea of kind of when you'll receive payments and how much, based on a snapshot of right now. But obviously I'm going to invest a lot more throughout the rest of the year, so this December $20 will change, but obviously once I update this will update as well. So it gives you a good kind of picture into the future. And you can see here, this is just a visualization of when I'll receive my payments. And as is typical with most, a lot of the companies pay out in December, March, June, and September. So that's why you see higher payments in those months and lower payments in some of these other months. And if you really want to have a kind of consistent payment year round, you could go into and look for companies that, okay, I want companies that are going to pay out in January, April, July, and October, to kind of narrow it, right? And then February, May, August, November, and kind of get your clover there to look equal payments all year round. But for me, I don't do that, and I don't look at when a company pays their dividend. It's not a concern of mine right now. I look at it on a yearly basis, so I'm not trying to have an equal payment each month. So this will probably stay this way, and maybe even grow a little more depending on my holdings. Here is just a snapshot of every company that's currently in the portfolio. There's 100 of them. They're all dividend paying companies. Here's just a good example of the breakdown of the entire portfolio by stock, how much that stock is as a percentage of my portfolio, how much that stock has paid me in dividends as a percentage of my anticipated total annual dividends, and then what's it paid me to date as a percentage of all the money I've made to date. And it gives you a good idea if anybody is kind of either lagging way behind where they should, or kind of running up and becoming too much of your portfolio, either as a percentage of the entire portfolio or as a percentage of your dividends. So I'm trying to keep it under 5%. And you can see right here, the biggest player and payer in my portfolio is Federal Realty Trust. And they're going to give me, they've given me a little over 4.25% of my total dividends to date. But once everybody starts paying and this thing kind of works its way out, since it hasn't even been a year yet, they should be right under 4%. So they're under my 5% cap. Everybody's under my 5% cap. So I'm pretty happy with this right now. The other thing that this will kind of help show in the future is if there's a company that is doing really poorly and their yield goes real high, right? You're going to see the blue line, right? Percentage of my portfolio, it may dip very low. And the anticipated annual dividends from them might push up, but not so much, because this is going to be an automatic kind of rebalancing, right? So if a company is always kind of lagging behind the rest, when I put deposit money in, it's going to push it back up. But it does help give a little bit of an indicator. And then down here at the bottom, right, you can see the continuous dividend payments with increases. So on average for this portfolio, if you just picked a company out of here, it will have increased its dividend almost 28 years in a row without decrease or flatlining. Now, if you just go with continuous dividend payments and you don't worry about the increase or decrease, the average company in my portfolio has paid a dividend every year for almost 35 years. And then this is just a breakdown, right, of the average monthly payment I'm going to receive, the weekly payment I'm going to receive, the daily payment I'm receiving, and here's my progress chart to get to the 12K. Just to pull up real quick the dividends that I've received in January. So here's the actuals, and it also includes February to date, but looking at January, you'll see the ticker, everyone that's paid me, and the total to date. $7.66. So not a whopping amount. And you'll notice also that that is less than what the dashboard says I should receive in January. But again, that's because it's not, it's already been updated to include any extra money that's come in. And any payments I'm getting in January and dividend payments were probably declared in December of last year. So it's not going to, I'm never going to see that money immediately. So it's not going to be zeroed out, and it shouldn't be, but it gives you a good guideline of what to expect going forward. The last thing I'll show you before we wrap up this video, actually I'll bring you back into M1 Finance too, but I just want to show you my internal rate of return. So here's my calculations to do an internal rate of return. So if you do an IRR on a yearly basis, right, essentially based on when I put my money in, right, because I'm not putting $6,000 in all at once. I'm putting it in little by little. So if you figured out when I put the money in, and if I took everything out and I cashed out today, right, my entire portfolio cashed it out, what would be my annualized return on all the money I put in? And that would be 55, almost 56%. So that's my IRR. And if you wanted to learn more about this, I can do more videos on it. And then I also have a net present value to look at the account where it stands today. And you can see it's 973. Essentially anything over 1 technically would be considered a good investment. But once you get into the hundreds and over 500, you got a really good thing on your hands, right? So I don't expect this to carry on forever. If it did, I can retire very, very, very early. But based on the first almost a full year, 10 months in, we're doing pretty good. Again, just pulling back into the account to give you an update here. Here you can see my return on a cash weighted return, money weighted return they call it here, is 32%. But on a IRR, right, I got almost 56%. And then on a dollar, just a portfolio overall, money in, money out at the end, the dashboard had it there, which doesn't look as glamorous at, I think it was 15, right? 14%. percentage gain or loss on the portfolio dollar, just cash in, cash out, percentage gain. So that's the portfolio. Going back to M1 Finance, I'll just quickly show you my holdings, though I could also do this in my Google Sheets. I'll show you the holdings here. You can see here unrealized gain of almost eight, a little over 850. And my cost basis here, you can see is a little higher than my cash cost basis. That's the reinvestment of the dividends to date. So you'll see here my top holding is Federal Realty Trust. Actually, most of these up top are going to be the real estate guys because I only have a few of them in here. I think I have 5 or 6 companies in total. Prologis is another real estate. Crown Castle, American Tower, Realty Income. So these are all REIT plays. Then you have Johnson & Johnson, which is kind of a cornerstone of a lot of dividend portfolios, a good solid company. You have AbbVie up there also, another healthcare company. And as you actually, let's go. So you can see the unrealized gain and loss. Let's just see the winners and the losers here, where we stand to date. So actually, ALB is number one with 100% gain. TPL, 100% gain. Applied Materials, almost 100% gain. And as we scroll down here, you can see most of the guys are in the green, though I do have a bunch of companies in the red as well. I'm not looking to make any changes, and I haven't made any changes from a month ago in this portfolio other than adding to it. So here you can see, right, from IBM down, we have some losses, but nothing significant, 1%, 2%. Pretty flat line. The biggest loss so far is the natural gas company that I have here, utility company, which is down 8% to date on my money. But not terrible. And again, if you go back to my Google Sheets, right, the average company in my portfolio has paid a continuous dividend for almost 35 years and has increased their dividends for almost 28 years. So these are pretty solid players. And if they're down over the course of a year by 4 or 5%, I'm really not concerned. I do keep an eye on all these companies. If there's a company that I think is in trouble that I need to switch out, I will do that. But at this time, I don't see any of these companies really being a concern for me to need to switch out at that time. All right, so with that said, that's the portfolio update and kind of dividend update for January. And I guess I'll do another one in 4 or 5 weeks from now, and we'll see if we can keep up the pace. Thanks for watching, and I'll see you next time.